Welcome everyone. Today we are back with yet another episode of What's Up Startup with a VC named Tushar Kansal. He's a founder of Consultancy Venture Capital. He's a seasoned venture capitalist with a experience of more than 2 decades. He is a University of Delhi alum and an alum of Harvard University also. So welcome, sir.
Thank you. Thank you so much, Ashish. It's a pleasure to be here. One of my colleagues had done his MBA in 2000 or 2001 or 2 from Lal Bahadur Shastri. And today he's the CEO of South Asia and Southeast Asia at ASICS, the Japanese sportswear firm. And he came to ASICS Singapore in 2013 or 14. And in a matter of 6-7 years, he has created a business of $300 million. So, he was my senior in engineering. So, I have such good regards for Lal Bahadur Shastri Institute, and you are also a very dynamic person. Let me give you my background. I am a textile engineer and MBA in finance from Delhi University, and I did my executive education from Harvard Business School. I have entrepreneurial side to my 20-year-old experience and also corporate side. In my previous life, I was in private equity practice at Deloitte and Touche, and also Brand Capital, where the team, which I was a part of the team, where we invested $100 million across companies. I was heading treasury at MTS India, the Russian telecom company, and was CFO with Distribution Logistics. That's a company owned by Guggenheim Partners. My firm, Consultancy Ventures, we are investor. Also, I have invested in 4 companies till date. One is an education company with 800 students. One is a consumer B2B company, export-oriented. One is a robotic company, which is based out of Gurgaon. And one is a fintech company. So, but we help startups and investors in many ways. I mentor startups and I help investors raise money also. So I help startups also raise money. In the last 7-8 years, I've built relationships with more than 350 global investors. So this is the background. We also help in documentation, pitch deck, valuation, business plan. So we help in all of this. And, it's a very exciting journey. The times are very exciting for venture capital.
So that's great to hear. So, hearing about your journey through long years. So, sir, what you have experienced that? So, you have been in the startup ecosystem from the starting, like from since the 2000. So, what has been your experience in the ecosystem?
So what happened was that when dot-com boom happened in 1999 and 2000, that time internet was still to the public memory. Internet was very young, 2 to 3 months old, and people saw that the valuations 100 crore, 50 crore, and people couldn't believe it because uh, India's economy only opened only in 91, and the asset values were not so high. And then the economy boomed when Mr. Vajpayee was Prime Minister, and everybody started getting the benefit of privatization. And the internet economy also picked up. So that time also things were not, the valuation world was not so much developed in India. Then, the 2001 to 2008 were very good years for the economy. And we had the mobile phone, the smartphone, and the faster communication and use of technology. And then, the real estate market was booming. And Gurgaon picked up in sometimes in 2004 and 5. In 2008, the economy tanked because there is a global recession which happened. And that time also, people thought that the recession will continue for a long term. But in 2009, the global economy picked up. It was sometime in 2009, 10, and 11 that India started becoming an attractive startup and venture capital destination. That time, Tiger Global and Naspers, especially Tiger Global made big money by investing in Alibaba, and Naspers also made big money. And Tiger Global's guy was Lee Fixell, and Lee Fixell said, if I copied American business models, planted them in China, and funded the Chinese companies, and I made millions of dollars. So India is 10 years, 12, 15 years behind China. So I can do the same to India. So that time, he invested in Flipkart, he invested in Myntra, Jabong, and he started investing across sectors. And that is the time the startup ecosystem, in terms of rich valuations, actually took off. And we started seeing $50 million companies, $100 million companies. And all those companies now are unicorns like Paytm. And what has happened is that there are job losses and work from home, and people are sitting on the laptop. So there is a lot of betting which is going on. They are betting on the stock market. So because they are betting on the stock market by apps like Zerodha, and so what is happening is that the valuation on the stock market of companies is very high. So we have Reliance jumping, we have HDFC and all the good companies jumping up, rich valuations. And those valuations are supporting startup valuations. So, yeah, so what happened was that the people look at the stock market and they see the valuations, and then the startups also are getting very good valuations. So we have this month itself, 4 companies in India have become unicorn, which means the valuation of more than $1 billion each. And Credit Suisse report says that we will have 50 unicorns very soon in India and more than 100 unicorns by 2025. So this is the kind of money we are seeing in India.
So, sir, I wanted to ask on
Sorry,
these.
it was a bit long answer.
No, sir, that's fine. So as these valuations are increasing, so sir, the company is raising more capital in equity. So do you think is it increasing an obligation for the startups to be successful and to so in the future there may be down rounds for these companies also. So it can be expected for these down round for these companies. So do you think that equity capital is increasing uh, some sort of some sort of punishment or forced for these companies to raise more and more capital?
The race is to the top. So the fund guy, when he invests, he wants his company to become the top 3 in the sector. Now, if reaching the top 3 takes dollops of cash, dollops of dollars, it takes uh, uh, high marketing spends, he's willing to give it. Because what happens is once you become the top 3, then global corporations start looking at you. Lot of dollars start coming at you. So whatever weaknesses would be there in your company, they start getting corrected later on. So first you can have 25% of the market or 20% or 30% of the market or 50% of the market, become a top leader, and then correct your mistakes, lower your cost, lower your cash burn, but somehow become the top 3. So that is the approach. And there was a fund guy I was sitting with, and He said, Tushar, your client is saying that he will invest 50% of the money I give him in marketing. Now, this is not good. I want him to spend 90% of the money which I give in marketing. So this kind of approach has its negative side also, that there is pressure on the startup guys to expand fast, to recruit more and more people, open offices, spend money on a lot of things. And just like, Snapdeal had 24% market share in India at one point in time, and they thought that they will be the top three. So they were competing with Flipkart to become a leader in India. So they recruited 10 to 15,000 people, and they started spending madly on marketing. But they made the basic mistake, the cardinal mistake. They didn't spend on their product. Their product was bad. People were facing problems while buying from Snapdeal. And the 24% market share very soon became 6, 7, 8%. And they had to retrench 10,000 people. And there are lessons from the startup world, all kinds of lessons. Flipkart got Tiger Global money, it got SoftBank money, and they did a lot of things right. So they opened a holding company in Singapore, which made it very easy for Walmart to buy them out, because Walmart believed that buying the Singapore holding company is more safer. So all these factors.
Yeah, that's right, sir. So, still, how long do you think that these models would be sustainable?
Till the time internet is booming, now the latest trend is people want everything at home. So we have a lazy economy. The guy is working, the woman is working. Both of them are tired because companies keep less number of people because they pay high salaries. So they take a lot of work. So the husband and wife both are tired. They want everything sitting at home. So, they will order through Big Basket, Grofers, Zomato, Swiggy. They will use Dunzo for the small pickups, and they will order through Flipkart, Amazon. And till the time this kind of a change, let me give you an example. D2C, direct to home, direct to consumer, was practically a very, very, very small sector in India. And uh, in the last 4 years, it started picking up in 2015. Now, in a matter of 5 years, it is a which means that instead of selling your products on Amazon, you open your own website and you deliver products at people's homes. So Mama Earth became revenue of 100 crores in a matter of 3, 4 years. Uh, you have bought the earphones. Within a matter of 3, 4 years, they raised uh, millions of dollars. And all these companies, the latest trend is D2C, direct to consumer. And as long as people want better service, faster service, honesty, standards in delivery, in product, in service. So till the time people are demanding, all these companies will keep on bringing out better products, better services, and competing with other companies.
That's great to hear, sir. So, as we are talking about the internet, so what do you think would be the technology of the future and that could change the startup system ecosystem?
So the technology of the future on the retail side is AR, VR, augmented reality and virtual reality, and use of robotics in retail shops. So, just to give you an example, if there is a pharma retail company, now each company creates their own medicine and they name it, they give it a new name. And So the pharma guy, he can't remember 10,000 names of medicines and how many can he keep? So, he keeps a small sample variety. Now, when somebody orders it on the counter, this guy has to find the medicine and he has to name, label it, all those things. So if you use robotics for that and have big pharma centers, definitely they will be able to do the job faster, just as robotics is being used at Amazon's warehouses. So that is, one thing. Then artificial intelligence and machine learning. Now, what has happened is that artificial intelligence, AI, has become a must. So, your customer is coming to your shop. You have your CRM, customer relationship management software. When the customer comes in, the system scans his face and he understands which person is, what is his health condition, what are the medicines he took, how much power. Then, uh, if to improve his health, can we upsell yoga instructor, gym, and make money from that also? Can we deliver the product at his home? And then, all this analyzing the data about the customer, it calls for artificial intelligence. So before the person, just as he comes to your shop, you are able to offer him intelligent choices and do upselling and cross-selling. And all that use of artificial intelligence, it is almost becoming compulsory with a number of companies. It is not optional. Nowadays, you have to use artificial intelligence. Just like you are talking about flower delivery to your friend. As soon as you open your Facebook or you Google or you see any website, you will start seeing flower advertisements, because all these databases are interlinked. Google, Facebook, you have Google AdSense, WhatsApp is owned by Facebook. You have, they have an understanding with each other, and they are able to offer you informed choices. And so, all this trend will continue in the future also.
So this trend of more data and data is also leading to more cybersecurity issues and privacy issues. So what's your thought on that?
So there is a dark web which is hidden from the public. It's called the dark web. And whatever transactions or information exchange happens at the dark web, mostly technology guys are able to access that. So what is happening is there is so much of data available with these companies about customers. Google probably knows about uh, 5 billion people out of 6 billion people on the planet. It has mapped each customer on 700 points, and it knows more about you than you can ever imagine. So all that data, and financial data, you have fintech companies, money is being transacted over the internet, and you have crypto wallets, you have DeFi and NFT, you have, DeFi and NFT were made with a view to make a financial internet. So all that data of yours is susceptible to be leaked out. Some company person can leak it out, some hackers can leak it out, and maybe the company is selling your data to the market, just like mobile companies, they sell your numbers and they make money through that. This has been happening since 25 years in India. So it's a very, very realistic risk in today's times. And your data safety is a big issue. And cyber security is a big business, and companies are investing millions of dollars in cybersecurity. And it is one of the most promising sectors, because the business being transacted on the internet will only increase. It will not decrease. So the importance of this cannot be lowered.
So can regulation or government regulations can improve or can change the situation, or it cannot?
See, we are living in those times when technology is 100 times faster than any government. So the government wakes up every morning and it realizes that some new technology has come, and the laws which are made by the government are either redundant or they are not up to date. So the government also has to deal with the fact that it is dealing with technology companies which have become too big. So Google is $2 trillion. Indian GDP, the sum of products and services of the country in 1 year is $2.7 trillion, and Google is $2 trillion. Apple is $2 trillion. Facebook is $900 billion. Tesla is $900 billion. That's the value of these companies. That is the power which they have. So if you are trying to deal with these companies, also there is public backlash if you try to take action against these companies. So then there are taxation issues. These companies earn from the database of your customers, but they don't pay any tax in these countries. So all these are big issues. And the China found a way of dealing with these issues. It created its own technology companies. So it disallowed Facebook, disallowed Google, disallowed Twitter, created Weibo, created companies in China. And those companies, because China is the world's second biggest economy, those companies are also valued at billions of dollars. So WeChat, 92% of Chinese population uses WeChat. So can India do it? If you ask me specifically about India, so a beginning has been made. We have the Twitter from India called Koo, Koo, and it recently got $30 million from I think Tiger Global. Yeah, Tiger Global. So this should have been done long ago, because end of the day you are giving your country citizens data in foreign hands, national institutions. So people even Google more, in Twitter more, in Facebook more, Instagram more, than compared to what government is saying or what the teacher is telling you. So naturally, this kind of mind space is very dangerous to be controlled by foreign companies, because these foreign companies can be influenced by the foreign governments, like in the time of election. So in the time of election, any company can use algorithms to favor one particular party over the other. What will you do about it? You can't do anything. So, you have to devise mechanisms. It is dangerous. But, countries are waking up to this threat. And China is a single party government, so it was able to solve the problem. But it is not easy for democratic countries to solve this problem. A big way in which to solve this monopolization of internet is what European governments are doing. European governments are very powerful. European Union is also very powerful. So they put heavy fines on US technology companies like Google, Facebook, if they take advantage of their monopoly. And this is what the other countries should also do. Recently, a fine of $2.7 billion was put. I think it was on Google, or I think it was on Google. So you can imagine that, one has to make use of all these ways in which to protect one's sovereignty.
So, you have also invested and been part of a lot of startups. So what do you see in a perfect startup, in a perfect startup idea?
Perfect startup. Sorry.
Perfect startup idea.
Perfect startup idea is an idea which makes profits and which makes money and which grows scalable is so much scalable that it grows exponentially by using the internet, by using latest technology. It is an idea which helps the human beings, our society, in a fundamental way. Like Uber solved the taxi problem and through a smartphone. It was such a big problem for people throughout the world finding a taxi, and it brought that solution to your hand, to your smartphone. So that is a environment is a fundamental problem. So we have ice breaking up in Antarctica and the Arctic, and because the global temperatures are rising, once this ice goes away from Arctic and Antarctica, the cooler of the Earth will go away. Already the weather pattern has become so bad that rains are becoming heavy. There are tornadoes. There are all these, uh, you know, uh, all these storms and everything, which have become very violent. And, in summer, suddenly it will rain for 10 days. And in the rainy season, suddenly, there would be no rain. And, the world has to deal with it. And just like Tesla is dealing with it, just like, on the, a lot of environmental friendly technologies have come. So, you should be solving a fundamental problem, and then the solution which you have should make money also. If it is not making money, it is not sustainable. If it is not sustainable on its own, then it will be at any point in time, it might get closed. So, it has to be profitable, have good cash flows, make money, have a leg to stand on. And lastly, it should be ideally, it should be scalable across countries. So if it is working in one country, you can plug and play and put it in other countries. So this is the ideal startup, idea which I feel there is. So, health is a big issue. Now, people, when they consume Coca-Cola or Pepsi, they are taking 20 spoonfuls of sugar. And already Indians have a high sugar and heart problem because we consume a lot of grain, we consume a lot of maida, and all that causes sugar problem. And we don't exercise as much. And so I'll give you an example. If you tell a European that after 6 p.m. you work, the European will say no. The Indian guy will say, okay, till 10 o'clock, I will charge 10% extra. From 10 to 12 p.m., I will charge 20% extra. So he is willing to put his health on risk and work extra for money. So if you go to Australia, they have these retail outlets. In each outlet, the person who's working after 6 p.m. is an Indian or a Bangladeshi or a Pakistani. So health problems are big. If you are solving the health problem in a natural way, like, that is a great startup idea. So, yeah.
So, when you look at pitch decks and have investor meetings, so what's that one question that you need the answer to? Like, what's the one question that's most important to you?
See, I would like to believe that each pitch deck which comes to me is matching with the situation on the ground. But, the problem is that the pitch deck is showing some picture, and many times or lot of the times, the actual situation on ground is different. So I like pitch decks, and in fact, my company creates pitch decks for startup founders. We create business plans and valuations also. So we know the kind of work we put in. We create the go-to-market strategy. We create financial projections. We do valuation. We create the fund ask. We create, knowledge of competitors, competitive advantages, go-to-market strategy. We do all of that. See, the startup guy should create a pitch deck which, in very simple 15 slides, tells about the business to the investor. And it should not be very heavy on text. It should be light. It should use graphics as much as possible to simplify. Uh, it should cover all the major points possible, like competitors, competitive advantages, the problem statement, the solution, uh, and all those things. It should cover easily. Like, I will tell you more, like team behind is very important. The team should be balanced. You should have finance guy, you should have technology guy, product guy, marketing guy. Maybe not all of them are founders, but even if two are founders, the other are on job, but it should be balanced. Then market size, the total addressable market, which the company is targeting. And then, some details about the product, business model. Traction is very important, that what is the business you are doing right now. Then competitor analysis, competitive advantages, financial projections, very important. Next 5 years, what is the business you will do? The fund ask, how much funds you are asking for, use of funds, how will you use them, that how much in marketing, how much in team building, how much in product, and and the future roadmap. So all these things are important to be a part of the pitch deck.
Okay, sir. So I was just reading that a lot of startups have a fundamental lack that they lack on the problem statement. They are not able to explain the problem statement correctly and uh, move forward with it. So, sir, what do you think should a person look for a problem statement and how should we uh, devise that?
So I hope I will tell you some terms like proof of concept, like minimum viable product, MVP, like product market fit, PMF. So there are stages. When there is an idea, then the next step is to find proof of concept. That this concept which you have created, whether it is workable or not. So you make a sample product, uh, take its opinion from people. Uh, then maybe it's heavy on the technology side. So nowadays, taking opinion of people is very simple. You put a poll on Instagram, LinkedIn, Twitter, people will reply to it, and you will get the data. So minimum viable product is that the product, once perfected, it should be making money and it should be sellable in the market. And PMF, product market fit, is when your entire strategy gets fine tuned. You know your distribution, you know your go to market, you know what is your target customer, your pricing is decided. What is your pricing? Now, whether you are going to sell it with a loan option, pay back later, or you want to sell it by tying up with a bank, or you want to take all the money upfront. So all these things, when they get tied up, we call that the product market fit has been achieved. So, ideally speaking, you should be so resourceful as in creative and energetic, that you complete your PMF, you start making revenue, do at least 50 lakhs revenue or 1 crore revenue, and then you should look out for funding. If you look out for funding at very early stage, then uh, it will be difficult for you, and finding the investor would be difficult. Convincing the investor will be difficult. and the money which you will get is less, and you will have to give a lot of equity in the company to the investor.
Okay, sir. So that's great to hear. So the person should look onto on these factors. So, sir, moving on to forward that here we have a small rapid fire for you. You have to choose between the two options.
Small, sorry.
Rapid fire for you.
Okay.
So you have to, so Steve Jobs or Bill Gates?
Steve Jobs or Bill Gates?
Yes, sir.
Uh, See, Bill Gates came from a very rich family. His family was a politician family. They understood how to, uh, manage the legal system, the intellectual property system, the stock markets. And, he was just at the right time, at the right moment. Although his philanthropy has done so much, he has done a lot, but still, Steve Jobs creating a $2 trillion company from a garage and inspiring millions of people and creating an entire new product just by imagination. That is like mind boggling. He's the guru. So it has to be Steve Jobs.
The product, like uh, consumer product or like a B2C business or a B2B business?
See, it is very easy to get funding in India for a consumer B2B business because the profit margins in India for B2B business are very nice. Uh, B2C business, you have to reach the consumer. If you are D2C, direct to consumer, then you will have to do a lot of digital marketing of your website. And the internet is a monopoly of Facebook and Google. So you will be spending a lot. If you are not spending a lot, you should have this high quality people who do your content marketing, who do SEO, and who are very innovative in getting the traffic. Uh, so so it has to be B2B for me. I have seen great products being built in B2B. On the B2C side, although India is a big consumer market on B2C also, but I will still keep with B2B.
So funding or bootstrap?
See, look at two companies. One is Zoho and the other one is Zerodha. Zoho, this guy was a techie, used to be in a job. He created Zoho, uh, more than $1 billion valuation company, unicorn company, never took money from outside. And the villages where he comes from, he has created offices in those villages. He has trained people in Tamil Nadu, where these people are working for Zoho. He has benefited his community. He has given it back. So that's why I admire Zoho. He could have taken money from outside. I don't have a problem with it. But, I like the fact that he did it on its own, which is very difficult. And Zerodha is the stock market app. Again, these guys, never took money from outside, but created $1 billion company. So on the companies which fundraised, which did fundraising and grew big, I have full regards for them also. But it's just that bootstrapping is difficult, and hence the achievements of Zerodha and Zoho seem to me bigger than the other ones. So I will pick up bootstrap.
Okay, sir. So now we would like to end the interview. So we would like to end on a quote that you like. So what that quote that inspires you?
A quote that inspires me. That's a very interesting question. Um, I am a follower of Bhagavad Gita. I have been taking Bhagavad Gita classes since 9 months, and I have really benefited a lot from Bhagavad Gita. But one quote which it comes from Harry Potter by Dumbledore. Dumbledore said it. It is our choices that show what we truly are more than our abilities. So I really like this quote. that we might be engineers or MBA and whatever, but the choices which we make, they show who we are. Because when it comes to the point of making a choice, our character shows what it is.
That's great, sir. So thank you for the interview, sir. I hope a lot of viewers
Thank
are
you. It's my
like,
pleasure, Ashish. Uh, and I really like that you are so, you really want to learn a lot, and you read books and you listen to all those things where you want to make your career. So I wish all the best to you.
thank you.